Yo, 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 yo. How we doing? Hope everybody's having a good day. Good morning. Ready to put yesterday behind us? Moving in the right direction. A little bit of a sell-off going into the open here. Ooh. We'll be right back. The Mimi, where you been? Morning. Making new lows going into the open. Talking to me? Yeah. I got you, Tamimi. Well, there's 80% off right now. It's the last day for it, actually. Ends tonight. What am I drinking? Just Coke Zero. Coke and Jack Daniels in a can? Ah, you caught me. Aren't those black cans? I think those are black cans. I got some of this. Just need to open it up. I was going to wait till Monday. Just to kind of... I didn't want to start now and then get all messed up with the weekend and stuff. Yep, no problem. It's the bell. Good luck, everybody. Totally forgot. Doesn't look like it would have mattered. Volatility is kind of crap. Just gonna leave it alone. Pretty weak open, but I guess it makes sense. Everyone's kind of like, yo, where are we going? I am live. Buy? Just buy for no reason? I mean, I could try. I don't know if that's the best idea. I see Wrongbow is alive and well this morning. Jesus. It's so annoying. I shouldn't say that out loud because I think he knows that. I think that's why it keeps happening, but I'm not going to do about it. Move on, move on. Decent little move up here. Just curious what 15 looks like at the moment. I was hoping for a smaller candle to risk off of there, but it's coming straight back down. Oh, our Russian friends are back today as well. Ugh. So we're gonna have to do the 5-minute thing. A decent move up here. I'm trying to... Decent move up, but choppy. What do you mean that we can't chat? I could jump in the Discord if you really want me to. It's just people are going to hear me talking to you, but they won't hear you. Unless you want to keep it clean. But a lot of times, your background noise and stuff like that is the main reason. I wonder what that person's going to say in 5 minutes. Got a new headset? All right, get in here. Let's hear it. I'm in there. I'm waiting. I went right in there. I also made it so they can hear you, just so you know.
Can you hear me?
I can. What's going on, man?
How you doing, man?
Doing all right. You sound exactly the same.
Well, it's not a matter of me. It's a matter of the background noise.
True, true.
I love your yesterday's recap. That was awesome. I give you kudos, man. You're like, I screwed up. I'm going to own it, but I'm not going to talk about it.
Yeah. You want to go watch it? Go watch it.
Uh-huh. I've embarrassed myself enough live. I don't need to recap it.
Exactly.
I saw you. I was like, dude, you're down 60. Walk away. Nope, can't walk away. Ah, you made it
I
all back.
I did twice.
I know, I know.
That was brutal.
Uh,
It was such a
I,
the whole day yesterday was just brutal. It was fitting. The way that all that played out was just fitting.
yeah, it's all right. You didn't kill your account. You just set yourself back a little bit.
Yeah. So the even more messed up part is I didn't stop being tilty after I ended the stream, and I pretty much made
No.
everything back.
I didn't see. I didn't see what you're up to.
Yeah. No, I pretty much got back to break even and just called it quits.
So you're like what, 58.8, 51.8?
Yep, 51.8.
Nice.
Yeah, I definitely kept being an idiot, but I did it responsibly. Like I was taking trades that I would normally take, but with way too much size. Like I could have easily have been here with no account today. You cut out on me there.
Or just another free down.
Yeah, you're kind of roboting. I understood you that time, but you're roboting a little bit.
That would be the street that I'm on right now. I still don't understand your entries, and I still don't understand your candles stop. Why your stop is so much farther than you take profit. But at some point, I will sit down with you on the screen, and you can really explain this to me. Don't bother doing it now. So it's not
Yeah,
relevant.
yeah. I don't.
The Keltner stuff, I'm beginning to understand. I mean, that's how I'm trading is off the Keltners. I got 2 good trades in today, so that worked out pretty well.
So I'm essentially still trading using the Keltners. I'm just waiting for moves that go into the Keltners, and then instead of trying to get long or short like before the move is over, essentially, I'm basically letting the move show me that it wants to try to pull back first. I'm not just assuming it's going to pull back.
Yeah, some of your entries are nowhere near those bands.
Well, yes. I mean, sometimes like there's just not the volatility to get to the bands. So if we get an extension away from that middle line enough to where I feel like it's okay and we're away from previous levels that I think we're going to come back and retest, that's where I might take a trade that didn't quite get to the bands. You completely cut out on that one.
And those are the ones that are 50-50?
I wouldn't say they're 50-50. I mean, I'm still looking for the pullback based off of the extension away from that middle line. It's just not... Because the thing is, I mean, how many times did we have both sets of bands up and it only gets to the first set of bands and then pulls back, right? So if it extends to something like that and then it puts in that smaller candle, I essentially have a risk off now, whether it's the high or the low of whatever that current move was, and I can look for that move back to the middle line. But I always stop out now. I'm not looking to add into my positions, etc.
I don't know. I've seen you with more than one contract there several times there, buddy.
Well, that's if it's coming to my stop, like if it's coming to that high or low, and I'm gonna stop out there anyway. Like, when have you ever seen me add a contract and not stop it out if it goes through that high or that low? So I'm adding, assuming that it's still gonna hold, and then if it doesn't, I just stop out anyway. I added a little bit of a loss.
All right.
Like, I'm not adding and saying, oh, no, if it goes to the highs, I'm just going to let it go and see what it does. Like, no, I added there because I knew I was cutting right there.
You're get the bigger move down.
Yes, yeah.
Okay.
Yeah, whatever area you're in, your reception sucks. Unless it's your new headset.
Agree. No, these are good. These are beats.
Oh, nice. Yeah, it does sound like your mic sounds a little bit more crisp.
It's also about to snow here or rain here, so that messes with reception. 3 dial phones here. But how was your New Year's, man? as you wait for the next setup. When a trade comes, tell me to shut up.
No, yeah, you're
And
good.
I'm
We're just
driving.
shopping in the middle here. New Year's was good. The kids had the full like 9 days off. That was fun. They actually both stayed up till midnight, which we weren't expecting. We were kind of letting them dictate how that night went, and they just kept trucking. And usually they're getting grumpy and grouchy by like 9, 10 o'clock when they try to
That
stay up
sounds like
late.
me.
But yeah, right. But no, yeah, it was good. How about yours?
My kids went to sleep because they had half school on New Year's anyway. They've got the Hebrew stuff.
Right.
They don't give off for the New Year's, so they'd have to stay anyway. And no, I don't stay up. I can't even remember the last time I was up for New Year's. I was in bed, I think, by like 10. It was a Sunday night. I go to bed early. I didn't have any work on Sunday, but I worked Monday, as I do every day. New Year's was a non-event. I woke up in the morning, the world was still going. I said, good, didn't need me anyway.
Know that feeling.
I gotta go take this call. I'll be back. I'll talk to you later.
Yep, yep. There is really not anything going on, man. Oxy is dumping. What is that all about? Isn't there some oil news or something? Isn't that later? And natural gas storage at 10:30. Crude oil inventories at 11. Did it leak or something? It's good for my covered call on Oxy, but at the same time, not too excited about the long-term play there. This is kind of a boring open. Yeah, the goobers are back. Speaking of. What's that up? It's like Wrongbow left as well. That's good. Welcome, welcome. Thanks for the sub. This market kind of sucks, guys and girls. This is boring, Sev. I agree. Alpine, what's up, man? Yeah, you do tend to like this chop. Because then if you happen to be wrong, you end up being right. You just got to wait a little bit. I'm not going to go long just to go long, man. I'm waiting for my setup. When you see something going sideways like this, you're probably not going to see me trading. That's the setup. Just go long. Don't do the same thing like yesterday. Yeah, I'm pretty focused on not doing that. It's showing an uptrend on the 1 minute chart. I mean, not really. I'm on the 1 minute chart. It's just kind of going sideways. I think if you zoom out, it just looks like it might be trying. I mean, if it starts to go now, obviously it looks that way. But until just now, it was just sideways. I mean, I can see what you're saying, but it's just not how I trade, so. Oh, the little channel things? I don't know. If I were to draw a channel, I would have had it. The line is downward, and it just broke it. I hope it makes a big move here, and I hope you guys are long, and then I'll look to short it once it finds a top. I look for big moves one way or the other, and then I look for the reversal. Is Bitcoin moving? Been hovering around this 43,000 mark. I'm only shorting if a specific scenario happens, my man. 50K account for 24. Yeah, that's pretty good. I mean, when they do their 90% off, it's 17, so I don't know. I just didn't like dealing with Top Step. Their website was kind of confusing. I don't know. I'll stick with Apex for now. They seem to be, to me, they're the best, especially when they run the 90%. I don't know what their plan is with that. I was actually talking to, I think, Tom. They just did 80% for 80 mil payouts. I wonder if they're going to wait until 90 mil payouts on their side of things to do the 90%, which means we wouldn't see that until probably the end of the month, maybe even into next month. I'm actually curious what they're going to do when this sale's over. Are they going to go back to the 71, or are they going to go to just go to 50 again, or like no sale? So that the only way you can get anything off is if you do one of the codes for 50% off. Well, that's 80 million in payouts, like lifetime. They've been around for a lot longer than just recently. A lot of people think that it just became a thing, but they've been around for a while. I don't know. That's a good question. When was Apex founded? 2021. So actually a little bit shorter than I thought. I thought it was like 2019. And was Top Step. Top Step's been around since 2012. But the fact that Top Step's been around that long just shows you that everything's should be fine as far as Apex. I mean, as long as they're not breaking any rules. Well, it was a good long. Thank you very much. Have a good day. Hey, man, good for you. I'm not saying you were wrong. I'm just saying that's not my edge. I'm not going to trade just because some guy I just met on YouTube tells me to. Now, if you come in the Discord and you show me lots and lots of payouts, etc., with proof, then that could be a different story. But this is the first time I think I've ever talked to you. Do you pull long or short, then trade it? Oh, God. It's actually funny. When I was thinking about directions to go with my YouTube channel before I stopped trading stocks, one of the things I thought about doing was I would do a video, and how many likes that video got within a week, I would put that amount of dollars into a stock of the top comments choice. So, like, if I ended up with like 10,000 likes on a video, I would put $10,000 into, say, Tesla. And just literally build a portfolio based off of YouTube comments and likes. I thought that that was kind of a genius idea, but then I realized I don't have enough money for some reason it like started going viral to do that. But then I was like, well, maybe I could do like dimes but it's like dollars is the way to go. I don't have enough money to get it started. Thought it was a pretty interesting idea though. Should have done for science. Right? I thought it was actually a really good idea. I feel like I would need money to start because like what if it catches on like really fast? Like say the first couple videos it's like $10 and then the next video it's like $15. But then like say people are like, "Wow, this is pretty cool." And then everyone starts liking it. And now all of a sudden I have a video where it's 10,000. Hey, what's up?
Don't answer me.
You didn't say anything on my end.
I said, did you make any trades?
I have not. I'm hoping that we get a chance here. We're actually moving up to yesterday's close at the moment.
Where is it? Like 16.7?
16,530.
Room to 17.1.
Yeah, that's what I'm saying. Like, wake up to 100,000 likes. Like, I'm screwed. Oh, yeah. Yeah, exactly. The bot runners. That's very true. I didn't even think about that.
It's so different trading this and like not looking at stocks and prices. Like the price where it's at is just completely irrelevant to me.
Or maybe I could do like a total of like top comment gets the stock chosen, but it would have to be some kind of a ratio so it doesn't get out of hand. Like views, like the average of views, likes, and comments. So like you take views plus likes plus comments and divide it by 3. And they would have to be like legit comments kind of thing, you know? I don't know. That would, because then it gets tough. It's a lot easier to just be like, all right, it depends on how many likes we get on this video, blah, blah, blah. And then you just take that number and go. I don't know. It's interesting. It's definitely something to think about. I still have the thought to do it, but I just never, I know I don't have enough money to keep up with it.
Things. You're not even near the computer, are you?
Me?
You.
Yeah, I think you're talking and you're not actually transponding because you must be saying stuff and I'm not hearing you.
No, I actually hadn't said anything before that.
Yeah, no, I'm sitting here.
I'm not sold on these headsets, so I'm probably going to be returning this by the end of the month also. I just
Gotcha.
can't find one that I like.
I mean, have you tried like just one of the normal like wing looking ones?
Yeah,
No.
no luck with those either.
It's
I
so
don't like the
weird.
earbuds.
You would think in today's day and age that this wouldn't be that hard. You need a new cell service provider.
Probably need a new cell phone. My phone is like 4 years old.
I don't think that's the issue though. Who's your provider? I know I've asked you this before. T-Mobile. Yeah, you should be fine then, especially in a city.
In theory.
New start. What's up? Welcome.
How are your options doing?
My what?
Your options.
Oh, options. I actually placed some new ones earlier. They're doing pretty good. I put in cash secured put on Penn, PENN, Willow, which is W, and A firm.
So
Kind
on
of
these things,
diving in.
So on these options, does it go up and down that you can sell for a profit or loss, or is it like a set thing? You'll either make $50 or you'll lose $50.
It's a lot more complicated than that, but you can get out at any time if that's what you're asking. So it does go up and down, but it's usually going up and down towards a specific number based off of the option you chose. So like if you pick, here, I'll use my A firm one that I chose. So I chose to sell a put at a strike price of $41 for tomorrow. The expiration is tomorrow at 4 o'clock. So what that does is I'm betting that A firm does not get below $41 by tomorrow at 4 o'clock. And if it doesn't, then what I got paid in credit to put that trade on will expire worthless, and I get to keep that money, which was $35.
Okay. Now, how do you lose money on that?
So how I could lose money is if it goes down below 41, I would then get assigned 100 shares of A firm.
And where's A firm trading now?
43.86.
Okay, so it would have to come down $2.86 to hit the 41.
Correct. By tomorrow at 4 o'clock.
And what happens if it's at like 41.15? Can you just get out of it at that point and then just like keep what, $27 just to say?
So no, it's actually the reverse. So, well, it also depends on how close you are to tomorrow at 4 o'clock. Like if that happened right now, I'd be in a lot of trouble because I just opened it and it's that close to my strike already. like right now, when I got in, the price was at like 40. Let me see. It was at like 43, almost at 43 actually. And now it's almost at 44. So 30, I could get out of this position right now. I could buy it back for $18 where I paid 35 and I would get to keep the difference. And that was only an hour ago. So I would, yeah, I would make $17 on that because I mean, it's basically that option is almost 50%. It's up 50% like as of an hour ago. Not even an hour, actually. It's been like 40 minutes, which is really good. Like I'm not, a lot of people, if they get up 50% on an option, they'll just take it because why not?
And if it goes down to $4,100, let's say it goes down to 40.75 tomorrow at 3.55. So what is
So
that? What
I would have
mean
two options. Yeah. So I would have two options. Now, a lot of people, when they put in cash secured puts, they're actually looking to get assigned the stock if it does go below that strike price. Like the whole point of it is, like, say right now, A firm's at 44. I don't like A firm at 44. I'd rather own stock of A firm at 41. So I'll sell a put, get paid to sell that put, and if it gets to 41 and I end up getting assigned 100 shares of it, I'm happy with that because that's where I'm happy owning the stock. So in your scenario, if it goes to $40.75 tomorrow at 3 o'clock, you have two options. You can either allow it to expire and you get assigned the shares, or you can actually roll the option and essentially take a new position for, say, next week or next month. You can roll it as far out as you want, and you can actually do that and get paid again. So like, say you want to go down from $41 to $39. Well, you could go to next week, find an option that costs about the same, or that credits the same, if not a little bit more, and you can actually get paid to roll your option down $2 and just wait another week. I'm not gonna. Yeah.
Yeah, go on. Finish your sentence.
Good morning, Gear Shifter. I was gonna say a lot of people like it don't understand that it sounds like a cheat code, and I'm still processing it in my head because it doesn't make sense to me that you can just roll something and essentially like keep getting paid for it. All you're doing is the biggest risk is, say, like you have to keep rolling, and the more you roll, the more chances you have to getting into their earnings. And if you get into their earnings and you're on the wrong side of it, now say you have that A firm put at 39, say you rolled it down to 39 and they have earnings and it drops down to like 36. Now you're stuck because once you get too far past your strike price, you're not going to be able to roll because it's too far away. And you're going to end up getting those shares at 39 and the price is at 36. So that's where the risk is. But if you can stay on top of it and never put yourself in that position, and you're just constantly monitoring the price and you can roll when you have to, etc., like it's pretty hard to lose.
Okay,
and even
so
when you do
questions.
lose, oh, go ahead again.
Yeah, two questions. First, on the rolling thing, is so let's say in our scenario, you had the strike price at 41, it's now at 40.75, you rolled it down to 39. So now the stock's at 40.75, you rolled it down to 39, you're gonna make another $35, whatever it is. Can you
Probably
just
less than that.
and then, okay.
Oh yeah, again.
Can you just roll? But before, in theory, you had lost on the stock on the option trade, but now, since you rolled that, you kept your 35, and now you rolled it another $2, so now you're actually ahead. Can you just get out there for like $5? So okay, now I was wrong before, but I rolled it, so now I'm right, and now I can get out and still keep all the money.
Sort of. I see what you're saying, because the new option, I mean,
But now the new option, you're correct on.
Correct. The new, you could essentially do that without rolling. Like you can buy back the option at any time.
Right, but what if it's already below? Like you missed the entry, you missed the chance. Now it's below your strike price.
Yeah,
So if you buy it now,
you can still buy it back. It's just going to be a little bit more than you wanted it to be. Like it depends. Again, that's going to depend on how far along you are. Like if it's at 3 o'clock tomorrow, when you want to do that, you're probably going to be just fine. Like you're probably still going to take some profit. But if you roll it and then try to do it then, like it's no different. Like the price is still at the same spot. You paid that new option price because of where the price was currently. So it's all going to like even itself out. Like that $39 strike price is the price that it is for a reason. Like it's not going to change just because you roll it, if that makes sense.
okay. So I mean, but that's a way to protect yourself from getting assigned those shares that you really
Correct.
have the money
Yes.
for. Really,
Yeah, there's a lot of people that sell options with no intention of ever getting assigned.
okay.
But
Yeah, my other question is,
oh, God.
who's giving you that $35? Like, why would someone give you that money to buy? The stock's at 43. You got the option at 41. Who's giving you that $35? Can't they just wait till it gets down to 41 and themselves up the market?
It's a hedge. It's somebody that owns 100 shares and they're worried that if the price goes down to 41 that they're going to lose that. Like, because think of 100 shares, if it goes down $3, that's $300. So somebody's paying $35 to hedge their $300.
I don't understand that. I don't understand the hedge. So I own the stock at 43. Okay.
Well, it's at
That stock
44.
goes down. No, but I own the stock at 44.
Okay. Yeah, that's fine. Go
I
ahead.
don't understand what they're doing.
They're essentially, so they're buying a put so that if for some reason the price goes down, they're going to actually make money because they bought a put and they're also going to get to keep their 100 shares. But if it expires worthless and the price just keeps going up or stays above 41, then they paid $35 for that to happen. Like they're essentially just hedging their position. That's all it is.
I apologize. I still don't understand. If I have 100 shares in my account, and my price is $44, why am I spending money to get another 100 shares? 41. Am I not then doubling my position?
No, you're not trying to get 100 shares. I'm the one that would get the shares. If it were to get down to 41, I would get assigned their shares.
So that means he sells them to you for $41?
Yes.
So he loses $2.
Well, no, because I see what you're saying. I see where you're coming from. Think of it.
I don't know how it works.
Yeah. And to be completely honest, like I'm still learning as well, so these questions are good. But no, like so think of it this way. He has no intention of giving up his shares. He has 100 shares and he's just trying to protect those shares. So again, say you have shares at 43 and you for some reason think like the market went down the last 2 days, right? So people are like, well, crap, what if this keeps going down? I would like to protect myself. So let me buy a put at $41. I'll pay the $35, but if it does get down there, I'm actually saving money because it's protecting my shares that I have. So for every 100 shares, if it goes down $2, it's $200. But if you pay $35, you're essentially protecting that because you're going to make that money back via the put.
He owns 100 shares at $44. He buys a put for $41. He spent $35 there. He stopped down to. What happens to the 100 shares in his account? He's still down $3 a share, correct? On those shares.
Correct. Yes.
Is he not?
Yes.
Okay.
So he would have to give me those shares. Well, he would have to give me those shares.
At $41.
Correct. So he's losing on the shares, but what he lost on the shares, he's going to make on that put option. So what I think I think what you're not understanding is there's this is where the intrinsic value and the extrinsic value and all that stuff comes in, because I think what you're seeing is the $35. You think that he's only going to make $35 because he paid $35, but that's not true.
No, I don't think he's going to make anything. That's my thought. He gave you $35. And now he's telling you his shares except for $4, $41. So not only did he give you $35, he now his shares and he took a loss in those shares.
You were cutting out that whole time. I was trying to make out what you were saying, but it was tough.
Dan, that was a whole good thing. So in my mind, because I don't understand how this works, he lost the $35 that he gave to you. He no longer has his shares in his account because he sold them to you. He paid $44 for the shares. He's getting $41 for the shares, so he's down $300 plus $35.
Correct.
Where is he making his money?
From that put option that he bought, because when he bought that put option, the price was at 44. He bought the put option saying, I want to protect myself down to 41. So that put option was paying. I don't know how much it would pay. I'd have to go do the math, but I don't think there's any easy way to do that.
Where is that money coming from?
See, that's the thing, is I don't know how all that works.
Like, if he bought the put, but he lost his shares.
Yeah, like that money is coming.
$4,100.
Yeah, it's coming from the market somehow. Yeah. Well, the whole point of buying the put, it's coming from, so that money he lost, there you go. The money he lost from his shares, it's probably coming from there somehow.
Where?
Well, he's essentially betting against his own shares.
Who's paying him?
The market, so like when the market went from 41 to 44, that's $300. So when it goes from 44 to 41, that's $300. So if he's paying $35 for that, so he's paying $35, I'm selling for $35. So when it gets to this price, that money is completely separate from the market. It's not in the market. That's completely separate. So the $300.
He gave you $35. Okay.
Yes.
But now he also gave you his shares $4,100, but he spent $4,400.
Correct. But the shares, when those specific shares that he owns, no matter where they came from, somebody had them at 4,100 and sold them to him at 4,400. Does that make sense? So when it comes back to 4,100, that money's just sitting there. That's why it's a zero-sum game. Well, that's why everyone says it's a zero-sum game.
What do you mean
What's
that
up,
money
Nas?
is sitting there?
It's in the market.
All
right, good.
I own the shares. I own the firm. And whatever. I sold them to Devin at 44. 2 days later, he buys a put from you for $35. It goes down to 41. I'm completely out of the picture because I already sold the shares to Devin. Devin now has to sell his shares to you $4,100. He lost $300. You spent $4,100 on those shares, which are at 41, but you got his $35. What is Devin getting?
Nothing.
Where's
That was the whole
on?
point. But that was the whole point, is he was protecting himself on the down move. So he breaks even, but he's okay with that.
No, he doesn't break even.
Why does he?
His
He's out $35.
No, his cost average was $44.
But somehow, I'm telling you, on the put, he's making that back. I just don't know exactly how.
Right. So that's my question.
Why I said that before, but it was just more confusingly.
Why is someone buying a put? What does that do for them?
It's protecting them. It's hedging. It's literally hedging. That's all it is.
I know. You said hedge. You said protect.
Well, okay. So let me put it this way.
What those words mean?
Well, yeah, but if someone is hedging, it's because they already have a position. But not everyone's hedging. Some people will buy just naked puts. So, which is where they just, like right now, I know Tom from the Discord, and like he comes in the Discord and he's in the stream and stuff. But he bought puts on the SPY the other day, and they're doing really well. But he just bought the puts. So he doesn't have a position or anything. He's just assuming the market's going to go down into February. So he basically bought a put at a certain strike price at a certain date, saying, I think the market's going to go here by this date. And if it starts to go there, then he's going to start to make money. But all he did was pay an upfront cost, say that $35.
Where's the money coming from?
It's coming from the market. That, like, when the price goes down, there's also people on the other side of it that bought calls that are going the other way.
Yeah. I'm sorry. Either I'm stupid or you're just not explaining it well.
I mean, it's probably a bit of both.
That's definitely smart. I'm sure about to say. I'm definitely stupid. But I just don't understand how this guy at $44 who just lost his shares, who now cannot make the shares value back by holding it, like the stock is back at 44, he's out everything. I don't understand where he got his money from.
I want to actually go. I have a website that I look at for this. I'm going to try to pull it up. Let me see.
You probably should understand this stuff before you start doing it. But whatever.
Well, I understand what I'm doing. What you're asking, I don't do that. I don't buy puts or buy call. I don't buy puts or calls.
So you're going to sell something, but you can't explain why someone will buy it from you.
All I know is I sell it, and if it doesn't get to this price by then, I get to keep the money. And so what I was going to say, the other scenario that we had, as I'm looking into this, say it gets to 40.75 by tomorrow and at 4 o'clock, I would get those shares at $41. Well, you can then turn around. I now own the shares at $41. You can sell covered calls, which is essentially doing it the other way. And so I can sell for premium, say $35, assuming that I would put it at, say, $42. So now if the price goes up to $42, I would then have to give my shares to whoever sold that call to me. Does that make sense? It's the reverse.
I get
so,
and then I would have the exact same question.
Well, right. So in my scenario,
buying something from you?
Well, because he's counting on. Well, he's counting on the price not getting up to that point.
But again, he's buying a call or he's buying a put. He's spending money for, in my opinion.
Well, no. So think of it this way. So if the price is at 40, and you think the price is going to go to 50, and you buy a call at 42, what you're essentially doing is you're saying, I think by this date, it's going to be at least above 42 because I think it's going to 50. So any bit that it goes over 42, you're actually going to make all that profit. So I would have to sell him, say it goes to 50. That's money I would lose out on because I sold my call at 42. So that's $800 I would lose out on that he would gain because I sold it to him at 42.
Buying the option to purchase a stock at a certain price, and a month from now it's at 50, I still get to buy it at 40. I understand that part. That part makes sense to me. Okay. So I'm going to give you $35, and I think the stock's going to go up $8. You don't. You think it's going to go down. So
correct. I
win the bet. So now you have to buy the stock at 50, give it to me at 42. If you don't already own the stock, then if you don't own the stock, you're screwed. If you don't own the stock, you're still whatever. You're still screwed. So I understand that part of it. But if you already own the shares, why would you offer to sell them at a lower price than your cost? That's basically getting rid of a losing position.
Good luck, Sev.
So that's what I don't understand. Why is he buying that put from you that you're selling? I don't understand how he's making money there.
It's a hedge. It's just a hedge. That's all it is.
I know. What does he make and how and who's giving him? You're not giving him any money. You're only getting out
Yeah.
$4,100.
Right. Right. Yeah. I don't. That part I don't understand it. I
So
don't.
that's
It's a
what I
good
understand.
question. It's a good question. It's a good learning point. I'll have to look into that.
You know, I've got this widget here. I don't know what it does,
We'll
but it
see. We're
sells you
still in
for
this
35
range.
bucks. The guy's like, oh, great. What does it do? I don't know. So why is the guy buying it from me? You're selling it, but you don't know what it is that you're selling.
So when it goes to 41, it looks like if it, yeah, it looks like it would depend again on the time. Yeah, I don't know.
All right, well, you've got homework for the weekend.
Yeah, I'll look at it.
Why would someone buy a put on shares that they own? How do
As
they
a
make
hedge.
money?
I know it's
Shut
for
up!
that reason. I know it's for that reason though. I just don't
Of course
know.
it is.
I did
But what the hell does
maybe they
that
don't.
mean?
Well, maybe they're not making all of that money back if it goes down, but they're just protecting themselves a little bit. I don't know.
So maybe they're making a hedge that, oh, if it goes down to 37, they still get to sell it at 41.
All right, here. I'm just going to literally read this off the internet. Somebody asked the question, when an option trader sells a put, where does the money come from? Who is giving the money? And it says, an option is nothing more than insurance. There is an insurance issuer and a buyer of insurance. We call the options writer seller and the options buyer buyer. Just like with insurance, it takes two parties to agree and enter into a contract. There are essentially four stages to the life of an option. The creation. When the option is first sold, it increments and opens interest of the contract series. Trading. During the life of the option, it can be exchanged as its value changes as time passes and the price of the underlying asset changes. Exercise. The buyer of the option may exercise its rights under the contract. This isn't answering the question.
It actually is a little bit. So keep going.
All right. Exercise.
I got my answer. But go
The,
on.
the buyer of an option may exercise its rights under the contract if contract terms have been met. Expiration. At expiration, if the contract does not have any value, it expires worthless. Otherwise, it is automatically exercised. When an option is created, the premium is paid by the option's buyer. This premium is non-refundable and is transferred to the seller immediately. So what part of that answered your question?
So the part of it, I thought, actually now in retrospect, it didn't really answer the question. I was thinking that it did explain that there is basically it's a market maker for these options. So he's making money basically, and does he get a cut of the option? No, he doesn't get a cut of the option. It's 35.
Here's another one. This might help. It says, first, let's know or understand that derivatives is a zero-sum game. For every buyer, there is a seller. So when one person puts an order to buy an option, for the order to be executed, it's necessary to find the seller. So the seller in the option is the one receiving money or premium and is the buyer, and the buyer is the payer of the premium. Seller is asking the premium and buyer is bidding for the premium. So it still doesn't answer it. I need an example.
What is the point of someone who shares? The only point you can see is if the stock goes down to 41, goes down to 37. Where I see the insurance coming in is that you still have to pay at 41, even though the shares are at 37. So he's protecting himself those last. So he lost the $2. Or $3. He lost losing $7.
Yeah, Justin, we're
That's
confused.
the only scenario where I see the value of the buying. But if it just goes down to 41 itself, right there in the money, where it's called, he's risking that much money to lose.
Hold on, my wife's talking to me.
Hi, Devin.
Haha.
Well, it had to be said.
Justin GDT has entered the chat. He might be able to help us.
What, Discord?
No, he's in the stream. Hold on one sec, Justin.
Does anybody in your room know what the hell going on?
No, they told me to just stick to futures.
Like, stop talking about idiots. Let's go trade futures.
Sev, you're making money off that little move there? Oh, good for you, man. All right, so I'm gonna hold the button while I tell him what I think the question is, so that you can hear it, and just so if I don't leave anything out. All right, so Justin, we have a question. The buying and selling of an option. We're curious. So I would just give you the example we were talking about. So on a firm, say somebody owns shares at $44. They think that the price might be going down. Like say they see the market going down the last 2 days and they're scared. So they buy a put to hedge their shares on a firm at $44. They buy the put for $41. They pay $35 for that to happen. Now, the reason I know it's about that is because I literally just sold a put at $41 for $35 bucks. So that's kind of how this sparked as far as the conversation. The question is, what is that person getting from the put if it goes to 41, and where is that money coming from that he's getting? 13. Well, I don't know when you went long, sir. I'm assuming here on the break of this consolidation. I would assume we're going to go up and try to go green. Yeah, which we are. Now 13 points is not a little. If that's what you got, then nice trade. He'll be typing.
Oh, okay, because I couldn't hear anything. He was talking. Like if you think the stock's going down, just sell it and then rebuy it at 41.
He said, in a hedged example, I would assume they would resell the option at a higher premium than what they paid.
I don't know what that means.
Make the difference, which offsets what they lose on the underlying if they want to keep the shares. But he's not selling the put, Justin. He would be buying a put. Like he had, so I'm selling the put, he's buying the put at 41, but he's buying the put to hedge his position for the shares that he owns at 44. Or let's just say it doesn't even matter if it's a hedge. Like if somebody just buys a put when the price is at 44 and pays that $35 and the strike price is 41, like where does that money come from? Like if it comes down to 41 and he gives me 100 shares, like, I mean, obviously he has to have 100 shares. Wait a minute. Where did the 100 shares even come from? Do you have to have 100 shares of a stock to buy a put? Now, Jesus fuck. Now I'm really confused. He's saying, okay, so he says, right, so he buys the put when the price is higher, then when it goes down, the premium is higher. Correct. So they resell that option and then make the difference on the premium.
Premium.
So the premium is the $35, but he's saying when the price goes down to 41, that premium is going to be a lot higher. Which is true because they're closer.
You got your $35 already, right?
Yes, I already got my $35. Oh, so he's saying if he were to sell that put back, someone else is going to buy that put at the current premium, and that's where the money would come from. Ah, it's the endless circle. Okay. I didn't. That's what I wasn't putting two and two together, was the premium is going to change, because all I was thinking of, the reason why I wasn't thinking that is because our expiration that we were using was tomorrow, which is so close. I wasn't thinking about that. So that premium that was $35 at $44 would then probably be closer to, say, $300 when it's at 41. Does that make sense? Because you're basically at the money at that point. Like right now, if you look, like here, let me pull up the options chain. I'll just give you a live example. So if I pull up a firm, right now, if I wanted to buy a put at $41, it's actually, because the price went up since then, it's $14. But if I wanted to buy a put at $44, the premium is $94. So the closer you get to the current price, the higher in premium you're going to pay, because the more likelihood it's going to finish in the money. Does that make sense? I get that part.
Okay. So
Right. So think of it from the other side. So like if I wanted to sell a put at $44 and the price is at $44.15, I would get $95 or $94 to take on that risk. But the odds of me getting assigned those shares under $44 is a lot higher, which is why the premium is a lot higher. So I'm collecting more up front. Good.
So this put a 30 that used 30, and now it's at the 41.50, and it's at 3:30 in the afternoon. So this guy, so now the same put is what? Is now $200?
Well, according to this, it would be like $90.
$90. And now what? Now he has to go and buy another, or
So
sell a put.
So well,
What
no,
does he have to do?
so
If
he
now-
bought, yeah, he bought that put. So now he's a buyer. So if it goes down to 41.50 and it's now at $90, he could then sell that put to somebody else. And then he would keep his shares that he has. But he made $90 on the way down. Well, actually, it would only be
So he
like
made
$60 because you'd have to subtract the difference.
Okay, so he made. So let's say whatever.
So
made
he lost
$90.
$250, but he made $60. But he gets to keep his shares. So he made money on the way down, sort of.
So even though the stock is down $3, in reality he's only down like $2 because of the option trading.
Say that one more time.
So
I think
the
I
stock
think
is
I caught
down-
what you were saying.
Yeah, so the stock is down. He's down $3 per share on the stock. But because of the option trading that he did, he bought the put from you for $35 and then sold it to someone else for $100, just to use numbers. So
Right.
he recouped $65 of cash, and he still has the shares.
Correct. Now, also,
So
you
he's
can
not
think of
down
it this
to
way.
400.
Correct.
But the problem is he's now gonna. But the problem is now he's still gonna lose his shares at $41 because someone else.
Well, no, not if he gets rid of the contract. If he sells that contract back, all he has is his shares left. He doesn't have he doesn't have an option at that point.
He bought the contract, and now he's gonna go and sell it. So
Yeah,
I bought the.
Yeah.
So,
Yeah.
hold on. So you sold the put. You sold the option to buy 100 shares, or you sold 100 shares at $41.
Correct.
In theory,
Correct.
he bought that.
Correct.
So he bought the contract to sell you 100 shares at $41. So now he owns the option. So now he owns the option to sell shares, or the option to buy shares.
So he bought the put, which means he has the 100 shares. So then that's actually a question I want to answer myself later. I'll actually ask Justin that next. But so in this example, he has 100 shares. He bought the put. When it gets down to 41, he realizes he wants to keep the shares. So he then sells that option to somebody willing to buy it, or to buy it. Correct, because he's now selling. So then that actually lowers. So, and what that actually does is, so like your example, it was 300 minus 55. So now instead of being down 300, he's only down, 245. So what that actually does, if you divide that by 100, you can put it in cents. So like if his average on the stock price was $44, that actually would lower his average 55 cents, if that makes sense, because he made $55. So it's kind of a way to average down as well, because that's how a lot of people look at it. So like when I sell a put, so like I sold this put for $41 for $35. Technically, if I get assigned the shares at $41, I'm already green on them because of the premium I collected, which was 35 cents times 100. So my break even is actually $40.65. Does that make sense?
Right. That does make sense.
And that's kind of what they could do as well. So like he makes $55 on the put that he bought. I know I'm veering off here, but he would essentially make his new average would then be $43.45, which it still sucks, obviously, but
right. So some of this makes sense. I'm gonna hold it, and then I'm gonna come back in the room and try to ask some more questions.
All right. So Justin, do you have to own 100 shares to buy a put? So like you have to have 100 shares to sell a call. Do you have to have 100 shares to buy a put? I didn't even think about that. Because like if you, yeah, that doesn't make sense, because you could buy a call. I'm just trying to think of the where the 100 shares are coming from per contract and how it has to play out. I think that's the part that I'm confused. Because like I have leap options that I bought, which are these. I have ChargePoint, CGC, JD, Oxy, and FSR, and they're all, I just bought calls. They're long term, but I bought those calls. So at expiration, somebody has 100 shares somewhere that I would be collecting from them at some point, because they essentially sold a call on them, which that's the mind-boggling part. Like which I need to like make a chart that says buy call, like where are those 100 shares? If you sell a call, where are those 100 shares? If you buy a put, where are those 100 shares? Like, etc. And I guess that's why they call them naked, because they're naked calls and naked puts. It is very confusing. The seller of a call owes the 100. Correct. Right. Like you have 100 shares of something. Like the reason I bought all of these was with the intention, like on Oxy, this is a covered call on Oxy, which is based off of the leap that I bought. So they call it the poor man covered call. So I bought a long-term option, so I sort of own 100 shares, and I can sell covered calls based off of that. So if for some reason I ever had to exercise, I would then have to sell my long-term leap option to collect the 100 shares to then be able to give the 100 shares to the covered call. So yeah, if you do a naked call, okay, so you'd be forced to buy the 100 shares. So that's my thing. So if you buy a call, correct, that's somebody selling the call to you. And if you're the one selling the call, you have the 100 shares. Okay. That would make sense. So now, when you buy a put, you're on the other end of selling a put. So that's the part that doesn't make sense to me. Say you buy a put and it gets below the strike price. The person who sold that put would then get assigned 100 shares. Where do those 100 shares come from? the person who bought the put would have to buy 100 shares to then cover that contract. I think that's the part I'm not understanding. The buyer. So you're saying the buyer. Sorry, I'm watching the market try to go green here. Well, the NQ anyway. The buyer of the put. Because they are selling the buyer the right to sell them 100 shares at a given price. I'm still confused on that. Because so like, right, I mean, so like my put here on A firm, I bought this at 35, which you can kind of see down here. It's at 13. If this were to get down below 41, I would get assigned 100 shares. From who? Right. So you're saying the person who bought this $41 put that I sold would have to have 100 shares. That's what I'm saying. So the person who bought this put is responsible for 100 shares. But a lot of people, I feel, are buying puts without the 100 shares. Yeah, Tom, I'm glad you're here. We can learn together. Gotcha. So they would make money on that put, but then they would have to buy 100 shares just to sell the 100 shares at whatever the price is. You're not learning. Just brain exploding. Yeah, I guess that's the confusing part to me. It's like if I bought a put for 41, it goes below there. Great, I made money. But then how do I get the shares? So, oh, well, in theory, for every amount. Okay, so say it goes to 40. I would buy those shares at 40 and then give them to that guy for 41, basically. Is that what I was missing? So you would essentially make the $100 from the shares itself right there, not including, well, that's, so when you buy a put, you're actually assuming you want it to go well under that strike price. You don't want it to just get to that strike price. Right, you have to have a margin because you're going to have to buy those shares. So there's actually probably collateral when you buy a put. Let's just find out. Oops. Just go back to a firm, view all options. Let's say we wanted to buy a put at 41. I'm just curious if it says there's collateral. Yeah. Oh, no, it says released collateral. Oh, because I'm buying back the put that I already have. Damn it. Hold on. What's a lower price stock? Let's do Upstart. Buy, put. That's some juicy premium. Yeah. Might have to look at that. All right. Buy, put. Let's just say 33. It's 22. So max profit, that's if it goes to 0. Review order. You're paying 22 for the right to sell 100. So it's telling you. So you would have to sell 100 shares for $33 per share, which is the strike, by January 5th, which is tomorrow. This option will expire worthless if that doesn't happen. Interesting. Yeah, I don't really understand that part of it. I mean, it's saying I'm buying the right to sell the 100 shares for $33. So that's what it is. So I wonder how it works though. Like if I buy a put and it goes to say 31, I bought the put at 33, is it then my obligation, like as they expire worthless tomorrow at 4 o'clock, to then buy 100 shares at the current price so that it can then give the shares to the other side of the contract? I think that's the part that I'm confused. Or like, will the broker just do it for you? Like I think that's the part that I'm confused about, like how that process works. I think that's the part that I'm confused about. And this is actually doing really good. It's already down 66%. My Oxy call is doing pretty good too. That's for next week though. I'm probably gonna just let these go. They're looking pretty good. We did go green on the day, by the way, on the NASDAQ. Made our way up there. Still got the highs from pre-market, which was overnight. I expected there to be some kind of bounce. I mean, if you look at the hourly, we couldn't expect it to just go straight down. And that's a pretty big... Is this not... What's going on here? I guess I don't need to go too far. This was the highs. I mean, this is a pretty straight down move for 2 days. It'd be pretty naive to assume there's not going to be some sort of a bounce. I mean, look, we had a bounce here and then turned back over, so we'll see what it does. I would assume we'll probably hang out here for a couple days and then it'll decide what it wants to do. That was kind of my thought process getting in those puts this morning, which worked out pretty nice. I got in right before everything started going up. Stocks and futures are so much easier. Like well, that's the thing is, yeah, it is a lot easier, but with options, like when I sell these puts, I can make money both ways. Like it can go up or down and I'm still making that money. That's kind of the beauty of it. Well, right, if an option expires worthless, then it wasn't. Yeah, the worst thing you could do buying a put is it goes down to your strike price and doesn't get there, because then it expires worthless and you didn't make anything out of it. And you're still down on the stock if you were hedging. Sev, the market wizard, says good short is around the corner. Yeah, I'm actually interested here if we can get a decent little push. What's 15 ticks look like at the moment? It's still pretty good. If this tries higher, first try higher, I'll probably put an order here. Oh, but if it keeps going lower, I don't want it. So that, Sev, that's what I'm looking for. I'm looking for it to make a top, try to come lower, then try to go higher again, and then come back down. And I'm putting my order underneath that candle, risking the high of this candle. So in theory, I still kind of like this trade, but not sure I love it, because now the stop loss is kind of far away. Oops. And ideally, I like the move to be a bit bigger, like away from that middle line. 15 ticks just seems so far away. I'd have to change it to 10. Wait, why did it move my whole order? Did you see that? It like moved my whole order up. Looks like we're gonna try higher anyway. Yep, I can. I'm actually looking to possibly trade here on futures. So
no, we don't do that. We just talk about stuff we don't understand.
I think we started understanding it though, which is good.
Kind of, sort of. I'm still. We've gone down a different street that I don't know the direction of. So
no, I always do 15 and 10. It depends on the volatility. The slippage issue, so I don't know.
Are you really almost on the trades? I hope to do it later.
Yeah, let me just watch this for a sec. We're actually up at the top bands almost.
Talk it out, boy. Talk to me.
Oh, I'm just letting it do its thing at the moment.
Did you order out yet?
I had one out, but then it went higher, so I didn't get filled. it's kind of choppy feeling, to be honest. I'm not in love with this move.
It's not worth it. Keep it to the right. It's not worth it. This happened to you yesterday or 2 days ago. No repeats.
I'm not planning on any repeats.
Now, if you don't love the setup, don't take it. You're not listening to me.
I'm good. It went higher, and I like it better up here, but it can't go any higher.
You just told the stock what it can and can't do.
That I did. All right, we
Let
are
me know how
in the
that works.
trade.
Let me know how that works out for you.
Immediately faked me out. It did, dude. It came down, filled me, and immediately went back up to the highs.
Somebody you shorting or long?
Wow, Jesus. Yeah, I shorted. That was a quick loss. Jesus fuck. I literally bottom ticked that. It came down and faked me out and went higher immediately. Well, at least we know 15 ticks isn't an issue. Oh yeah, I told you it went right back to the highs.
Oh jeez. What did that cost you?
150.
Remember when I said to don't like the setup, you don't get in it?
I liked it when it went higher there.
The second time?
Well, it was kind of choppy, but then it made a decent move up there, so it just
It had
got
one
me.
more chop in it. It had one more chop in it.
And we'll see.
You should have been talking options with me.
Yeah, I don't think that mattered.
No, if you were talking with me, you wouldn't be in the trade. What the wife want?
Hold on, I'm in another trade.
Jesus.
Oh, it's set up again.
Your trading is getting away from the conversation.
Of course, I changed my take profit from 10 ticks to 15, and it looks like 10 would have got filled, and 15 is now not working. At least right this second. It literally bounced off my take profit.
It's as if they know.
Literally one tick. There we go, just got filled.
Woo!
I made half of it back.
Good boy.
I can't believe how quickly that thing literally filled me and just shot right to the highs. Like, oh, okay, thank you, come again.
Don't pretend like it's the first time that happened to you. Come on.
No, I know. And like Knives actually yesterday, he was like, dude, it's just how your strategy is. You just gotta get used to it. And I was like, yeah, you're exactly right.
Yeah, this ain't your first rodeo. You've blown up enough accounts. You've seen most of everything.
All right, it looks like we're kind of chopping now. Do you have more questions?
Yeah. So let's just follow this scenario through here. Devin's got 100 shares of a firm. His cost basis is $44. You're sitting over there with your options, and you sell Devin an option, a strike price of $41, costs him 35 bucks. He gives you the $35. The share price plummets down to 41.50, and it expires pretty soon. He's now down $2.50 a share, and he spent $35 by giving it to you. Now, what does he do? What's his next step in order to recoup some of that money that he's lost? Because if it goes down another 50 cents, he gave you $35. You're now going to buy 100 shares from him at $41. So now he's literally down $335. So what is his next step there?
Tom
That
makes a
he
good
can
point.
recoup this?
Tom makes a good point. Devin doesn't lose money, first off.
Well, his share price went down.
So his
Fuck
next
you.
his next step
I like it. I like it.
his next step would be that the premium on that option is much higher than $35 now. So he bought it at 35. Let's say it's now at 100.
But that, hold on. He gave you $35. That's the contract. If this goes
Correct.
down to 41, I'm going to sell it to you. That's one contract. That's one option.
Yes.
Done.
Correct.
So now it's closer. And now, so now the premium on that hasn't changed because you already bought that. That's bought and sold. That's signed and sealed.
Correct.
So he would just take out a new option.
Yeah, it's essentially a new option that he would have to sell that put at whatever strike price he want, or well, the 41 put to somebody else for the current premium.
So
And if
now
nobody's willing to do it, then he's stuck with it.
So now he's selling a put because before he just bought one. He bought
right.
this agreement from you.
Yes.
Now he's got to sell an agreement to someone else
At a different
to do
price.
What?
To get whatever the difference is. So if he bought the put at $35 and now the price went down towards that $41, the stock price, the premium's going to now be much higher because it's a lot closer to the strike price. So let's say it's $100. So now he needs to find somebody to pay that $100 for his put that he paid $35 for.
So now instead of buying a put, now he has to sell a put to someone else to do what? That he's going to now buy shares from someone else at $41?
Well, no,
Yes,
there's a buy to close or a buy to open and sell to close.
Hold on, I got it. So now he's going to sell the same way you sold the contract that I'm going to buy 100 shares from Devin at $41. He now is going to go to Steve and say, I'm going to sell you that I'm going to buy 100 shares from you at $41, and you're going to pay me $100 for that. So now, in order to cover his contract of providing the 100 shares to 41, he's actually getting that for me at 41, and he's keeping the premium of the $100 for that purchase.
Yes.
That's how it works. So he's not really losing his shares. He's shares stay in there. He's getting the shares to give to you from someone else.
Yeah, that's kind of the whole point of the hedge. Is he's trying to keep his shares. He just wants he doesn't want to just sit back and so the whole point of options is to take buy and hold to the next level.
So he's keeping his shares, but if that one that you bought, now you're going to get $4,100 to him. He's just going to turn around and get those 100 shares from someone else and give them to you.
So I know GDT saying no, 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 and I know you're on the right track. So when he bought that put, when he sells that put, he bought the put to open a contract, but when he sells the put, he's actually selling to close. He's not selling to open. When I opened the put by selling, when I sold the put, I actually sold that put to open, where if I wanted to close that position, I would have to buy to close. Does that make sense?
Yeah, you'd have to spend money so that way you don't have to buy the $4,100 worth of shares.
Correct. But the way you were explaining it is that he was selling the hundred, like yeah, like, so he's not selling. It is a different option, but it's only a different option to the new person that he's selling it to.
Right.
But when he's done, when he sells it, he's done. Like, he has nothing open at that point. So he sold it for $100, and now that new person is essentially in the contract
instead of him.
Yes. And
So
eventually,
now-
it's at some point, these contracts are going to expire worthless, and that's how it all ends up playing out.
But let's say the contract does get exercised. So now, instead of buying the 100 shares from Devin, you're buying the 100 shares from Steve.
Correct. Yes.
Okay, so he's just passing the buck to someone else.
Yes, and he, in a way, hedging his. Like I said, think of Devin. He's a buy and holder, right? So he bought these shares from on a firm at 30, and they're all the way up at 44. Well, he thinks a pullback's coming because he sees the market dropping. He's like, oh, I want to try to make some money on the way down. Instead of just watching his shares go from 44 back to 41, he says, well, if they do go to 41, I can make some money on it. So he buys this put. They go towards 41. They're now worth $100. He sells it for $100, and he made money, and he gets to keep his shares. And it works in reverse too. And like, if I own 100 shares and I want to make money as the price is going up, you can sell covered calls. It's the same. It's the same exact thing. I want to keep my shares, but instead of just watching the price go from 41 to 44, I can sell for premium a 44 call. And if it gets to 44, then, or if it doesn't get to 44, I made money on my stock that I own going up, as well as on the premium from the option of the covered call. So it's essentially taking buy and hold to the next level. So instead of your shares just sitting there, you can make money on your shares. Don't say no. That's right. Justin's saying no. Hold on. Let me see what he says.
7-minute speech. No, you're wrong.
Joking each other about options. I'm pretty sure I'm right. I'm interested to see what he says.
And this is why most people use options, because they don't know what the hell they're doing.
I wish it had I was like, I wish it had a typing thing on there.
Typing thing on where?
He said you'll only make money on a covered call when it goes up, if it doesn't reach the strike price at expiration or before. But if it goes up and hits the strike price, then you'll have to sell your shares. Well, yeah, that's why I said if it doesn't get to that price. Because I said originally if it gets to 44, but then I said if it doesn't get to 44, then you would get to keep the premium. Well, ideally for a covered call, you want it to go to $43.99. Because then it expires worthless, even though it was by a penny. You get to keep the premium and you get to keep your shares. And it went up as much as it could without you having to get rid of your shares. That was a big drop there on the market. For Science Trade would have worked. Well, so GDT said, except at that point, you'll probably, if you want to keep the shares, you're probably going to freak out and sell the call at a loss because you don't know it's going to stop there. Well, you could just roll it. Have you learned about rolling, Justin? It's mind-blowing. That was a big drop on the market. We're going right back to green to red. This is all making me very hungry.
Rolling sounds like a reset on a valuation account. For a price, you can just reset your account.
I mean, essentially, that is kind of what it is.
You don't
You're
lose
well,
500.
you're
You
just
lose $40.
well, what you're doing is you're giving the option more time to work, essentially. Like you're paying, or well, you're actually selling for a credit for the right to have more time for it to work. So it's like, I was wrong, let's give it a little bit more time. But in the meanwhile, you got to pay me for my time, kind of thing.
It's a little penalty. You know, there's the whole thing, just a little.
Well, that's what I'm saying. If you roll correctly, like if you stay up with it, you'll technically never lose. The only time you can lose if you're rolling is if you get caught in like news or earnings or something like that. Or if there's some like, news or earnings. It's really the only things that can bite you. But if you just have normal price movement and you stay up with it, because where people get in trouble are the people that do this on the side and say they sell a put on a firm at 41 and then they don't realize earnings was today and then it drops to like 30. Well, now they're stuck with the stock at 41 and the price is at 30. That's how you can get in trouble. But if you keep up with that kind of stuff, then you should be all right.
Yeah, all this sounds wonderful, but there's got to be something we're missing, because most people lose at options.
Most people that buy options lose. Because every day when you buy an option, every day you're losing money through theta. And that's a whole different topic. Like think of
Doing theta now.
Well, no, theta is actually really easy when you break it down. You take the price you paid for the option, the days to expiration, and you just divide the two, and you're left. So if you have, say you paid $100, there's $100 to expiration, or 100 days to expiration. 100 divided by 100 is 1. So every day you're losing $1. That's pretty simple. God, I should have took that trade. The stop loss is too far away, though. Yeah, we would have just got filled. I just don't... The volatility is actually not that great. 15 ticks is so far away. I'm going to change to 10. 15 is just so far away today. See where 10 would have been. Oh, shit. Trying to come down and get me. Next is going to be 5. No, like I said, I do it based off of the volatility. I do it based off of like what it looks like on the chart. And 15 is like I said, I'm looking for like that quick burst through key areas, and 15 ticks, it's like I'm looking for a whole candle. I'm not looking to try to take advantage of a whole candle. I do have to pee though. I'll be right back. I feel like I gotta knock out some of these push-ups. Is my risk still the same, so it's negative? Well, I mean, if the candles aren't that big. I mean, like even here, I was trying to make 75. I was only risking 150. Or actually, no, I think I changed it to 10 here, didn't I? And then I changed it back to 15. But that was because the volatility was picking up, even though we got faked out. So yeah, we were risking 150 to make 50. So it was a 1 to 3 there. But 150 is not that much. So if I was risking 30 to make 15, that's a 2 to 1. So it actually, I mean, it depends. And it all depends on the size of the candles too. That's the other thing. I'm trying to take what the market gives me. I'm not trying to tell the market to give me what I want, if that makes sense. All right, I'm gonna knock out some push-ups. I need to do them real quick. Obviously, I'm not gonna trade while it's right here in the middle. I'm gonna try to do 20 to start, but I don't know if I'm gonna be able to do it. We'll see. All right, we got 20. Wasn't expecting to be able to do 20. I was pretty tight from yesterday. Whew. 25 now. I wasn't doing 25. I'm gonna do 50. I'm gonna try to do 20, 15, 15 for a while, like for the first couple weeks probably, and then maybe I'll try like 25, like 25, 15, 10.
So after all this talk, how is your option?
How is it? It's currently trading at $10, so I'm up 75% on it, actually. It's hard not to take it, but knowing it expires tomorrow and the price is way up there, the odds of it getting down to 41 are next to nothing. So I'll just let it go and make the extra $10.
So the max you make out of this thing.
Yes. Yeah, when you sell an option, you get that credit. That's the max you can make on it.
Okay. Then assuming that it doesn't go down to 41, you can't lose anything.
Correct.
Correct. If it goes down to 37,
I'm hurting
then you have to buy the shares
at 41, and I would immediately be down $400.
Right.
Yeah. So when people sell, okay. Some whippy action. Was there some kind of news? Oh no, just the oil stuff earlier. There's a decent amount tomorrow at 8:30 in the morning. That's what she said. It was kind of fun. I don't feel like I learned anything new. I think I just learned a better way to explain it. Like, everything turned out to be what I thought it was. I just didn't quite understand how to explain it correctly, if that makes sense.
Okay.
All right.
I'm here.
So what I was going to say is, everyone who sells a cash secured put, the idea behind the sell should be that you're looking to own the stock at the price you sold it at. Like, that's kind of the whole point. If you're only selling it for the premium, you then become a premium chaser, and that's how you end up getting yourself in trouble. And then you start playing like riskier things like earnings, or just playing riskier stocks in general. Like, I'm going to always be trying to play stocks that are known stocks that aren't just going to fall off the face of the earth. Where a lot of people that you hear about losing all their money, It's because they are playing AMC and GME and, you know, shit like that. So if you stick to the more quality stocks, then you're gonna be a lot better off. Like growth stocks.
In theory, you would be fine owning a firm at $14.
Correct.
Because you got the $35 already. So
You're breaking up real bad.
in theory, your cost is $40.65.
You broke up. But yeah, I think you said my
Hold on.
average would be 43.65 or 40.65.
Yeah.
Correct. Yes. Yeah. So what I did too is, so I use technicals as well. So before I get into a position, I'll pull up the daily chart and I'll look for where I think the price would not get to, and then I try to find an option based off of that. So like if you pull up a firm, it looks like it would have trouble getting under 42. So I went under that to 41, and that's how I found my put.
Who sets these premium prices? How does that work?
That I have zero idea. That's the market makers, I think. I don't know. Oh yeah, I do. Let me get 15 push-ups in real quick.
Okay. So you said this put is now down to $10?
It's back to 13 at the moment. Or it's back to 13 at the moment. But yeah, it's like hovering around there.
Okay.
Yeah, A firm's
So
kind of
basically-
fluctuating between 44 and like 44.50 at the moment.
Now what if A firm shoots up to $50?
Then it would pretty much, the put itself would probably go down to $1 or $2. Probably $1.
Okay, so it wouldn't affect you at all.
Well, it would if I like. So the thing, I've actually had a couple puts that I've sold already where I got in, and then the day of expiration, it was so far away from it that it was sitting at a penny. So you have a lot of people that bought these puts that are like, well, I clearly see it's not going down there. Let me just try to get the dollar back. So that's all it is. So I could sell this for 35, and then tomorrow, if the price is still up at 44, it's probably going to go way down. So if it's at like $1, like in the morning, I could essentially say, okay, I'll take $34 instead of $35, but I don't have to worry about this thing all day. So it could matter. And some people do that now. Like some people would be like, wow, it went from $35 to $10. That's 75% in a couple hours. I'm going to take that. And then they don't have to worry about it the rest of today and all day tomorrow.
Right, you don't have to worry about any news or anything.
Right.
Right. Yeah. It's like trading a stock. You take your 10%.
Right, exactly. Yeah, a lot of people that play the longer term options, they do that, but at 50%. So like if they get up 50% within a certain time frame, they'll just take it off, and then they'll just find a new trade.
Makes sense.
Yeah, no, yeah, it totally makes sense. I don't plan on doing anything long term. I'm more just looking like this week or next week kind of thing. But that's only because I can sit here and watch it all day, where a lot of these people that are doing the long term stuff, they're not.
All right, it's sort of setting in. Still not 100% sold on it, but
I mean, I'm not trying to sell you on it.
I'm not planning on trading options anytime soon anyway. I'd like to get the NQ funded and have them send me a check first.
I was just looking for a place to park my 25K from my day trading account and possibly make some safer money on it, and then that's how I came across selling options. And I mean, it's It's pretty interesting, and it's definitely a like if you keep buying options, like looking for home run type plays on them, like you're gonna lose a lot, and you're just gonna kind of dwindle down until you maybe finally hit one. Where when you're selling, you're the one selling to these people looking to hit those home runs. So it's really just a matter of organizing and collecting, so to speak. GDT said, "Do Tesla $1 puts for next January and then go take out all their plants." That'd be one way to do it. Create your own illegal money.
Take out all their plants. I mean,
all their car plants, like so they can't produce any cars.
Yeah. Oh, that.
Oh, and we just spiked down to the green red line. Or red for a second.
You're still down 75?
Well, after commissions 82.96, but yeah.
Oh, I thought I asked you, how do you get that blue line with the drawdown and all that stuff? How do you get that on your screen?
I post from? It's an indicator that somebody made a custom indicator for Quantower. I put it in my Discord. If you go to the tools channel, I put it in there and I put a little brief tutorial underneath it on how to do it. It's real easy.
Copy and paste.
Well, you kind of do copy and paste. It's a zip folder, and then you unzip it. You copy paste the files to a specific place in the Quantower folder, and then that's it. You restart Quantower, and then go to indicators, and it should be right there.
Yeah, that sounds like something that you and I will do from the computer and screen sharing.
Yeah, that's fine. It's a lot easier than. I mean, I thought that sounded pretty easy, but.
You're a computer geek.
Oh, crap! I got 15 more push-ups. Yeah. All right, I'm gonna knock out my last 15 push-ups real quick, and then I'm gonna go put my salad together, hoping for the market to do something.
I found a little salad.
Yeah, that's what I've been doing.
All right. See you later.
All right, 50 done. Let's go get my salad. Oh, whoa. No. Damn it. If that came down first and then went up, I'm going to be pissed. I'm going to go check. Let's see. Let's see. Down. It went up. Started to go back down. No, not really. That would have been hard to... yeah, nah. I don't think we would have taken that anyway.
Next 6 days and
Just order RGB lights? Nice. That'll just show me when you get them. I don't want to put an order here either, because look, support and then resistance. That sucks. I'll try this trade if we get it. Just looking for the move back down. Stop if it goes. Oh, didn't even let me put my stop in. I just can't seem to get those like pushes through the candles right away. It always fights it. Oh, this one's actually gonna hurt a little bit. Oh, not really. Oh, what a fake out. Got us again. Just getting faked out all over the place. I mean, I'm only looking for that initial burst through. We got it, just it only went 5 ticks. I'm only looking for 10 ticks. I only got 5. Now I feel like we could probably get closer to the lows. If it does come down. A little higher. It's fighting in this area though. Should have just went and got my salad. Thought I hit something. I just cannot do anything right lately. 24/7. Why would you want him on 24/7? I have no idea, but I want a video. Give him a piece of your chicken. One more. Right. He was short at the top. I think he was. He started it a little after, I think, these trades up here. I mean, I don't know for sure. I don't think he's posted the charts. I don't even know what he's trading, like if it's a prop account or what. This sucks. I feel like we've been fighting to break even lately instead of actually make profit. What are you all up to? Let's chat. Let's do something. Somebody that can chat. Don't get in trouble or anything, but feel kind of bored just watching the market do nothing. There you are, big boy. That's funny. Why would you want to block recommended videos? Nice. Prop top step. Cool. Do you have me on like massive delay? I feel like we asked you that like 15 minutes ago. I guess we'll find out in 15 minutes. Nice, Sev. Zishan, man. You sound like you're having a midlife crisis. RGB lights. New car. Or are you just taking all this from the register? Blue, how do you, I mean, I know how you can get addicted to YouTube, but like what were you doing that was addicting? Next, he's going to tell us he's putting RGB lights in the new car. Cat videos. So just the endless clicking. That's nice of you, Zishan. What kind of car are you looking at? Trying to gauge how much money you got. I mindlessly click sometimes, like before bed. Believe it or not, though, it actually is what kind of helps me go to sleep. Like I'll sit here, depending on what time I sit down, I'll watch videos for like a half hour, and that actually makes me tired. So it's, I don't know, kind of nice. What kind of Honda? Like an Accord? Assuming that, based on the IS350 comment. Oh, I'm an idiot. He literally said according, and I didn't even read that part. I just skipped right to Lexus IS 350. I was like, what are you talking about autocorrect? And that's... There's nothing like eating right after you do some sort of workout. Thought we were going to have a nice little dip there. Pretty obvious line here, though. Resistance, resistance, support, support. Now support again. This will be a key area, 16.5. Whenever my wife's done eating, I'm probably going to jump off. We're actually going to take Rags, our oldest one that we're putting down on Saturday. We're going to take him for one last ride in the car. Get the window down. Let him stick his head out the window. I have to hold him up, obviously. We're trying to think of a bunch of things to kind of make him as happy as we can before Saturday. I know, man. Just talking about it, I'm literally holding I'm holding myself back. I do it enough off the camera. I don't need to do it on the camera. He loves cheese and popcorn. Those are like two of his favorite things. We've been spoiling him this last week ever since we decided to do it. We have a lot of pictures. He's like, you know how people take pictures of like their old grandparents that are about to pass in the hospital bed, and it's like that's what I feel like they'd look like now, and I don't want him to be remembered like that. He's very out of it. Like you can tell he's just ready. Like I have a feeling if we weren't doing it, it would happen relatively shortly anyway. You can tell he's just ready. I mean, we have to pick him up and take him everywhere. Like we're taking him out 6, 7, 8 times a day. It's it's just he's ready. Like if it started to feel selfish that we weren't letting him go. Like his body's still ticking, but it's ready to just not be. You can tell. And it's just sad. It really is. He's been through a lot. He's been through a lot in my life. 16 and a half years. I was 21 when I got him. I'm 38. It's crazy. So my wife was saying, why do we put ourselves through this earlier? Like with, getting our new dog Tucker. And it's like, for this moment of sadness and the moments after they pass that you'll remember them and have that little bit of sadness, in remembrance of them. Think of the 16 years, 10 to 16 years that they provided memories that you'll never forget. And that's what you have to think. Like they were special enough. They were special enough to make you feel this way. And if you don't if you don't have anything that makes you feel that way, then what's the point of living in the first place? Yeah, I even told Amanda earlier. I was like, just give him shit that you wouldn't normally give him. That's what I've been doing. I told her tomorrow I was thinking about making some bacon. That was Subi, the one that passed almost it was like a year and a half ago. That was her favorite thing. She loved bacon. She ate pretty much a whole pound of it the day that she passed. She loved bacon. Bacon and cheese. She could still eat everything though, where Rags, he doesn't really have any teeth left. That was like his two big things, his teeth and his hearing were like the only two issues that he had. And the hearing didn't really go until last year. But you can his eyes are starting to go too. Like he doesn't see you until you get pretty close to him. He was a great dog. Definitely, like I said, he's been, besides family, obviously, the one thing that has been there literally every day for the last 16 and a half years. Little shit. I will say I won't miss the shedding. Will not miss the shedding. When we got Tucker, that was a requirement. Was a hyperallergenic dog. No shedding. If we ever get another dog, it will not shed. I will never have another dog that sheds. That's like one of the worst things about pets is the shedding. It's so bad. And then we were dumb enough to get a pug, one black, one fawn. So then it didn't matter what kind of clothes you wore. At least if you like had black pugs, you could just wear black and get away with it. Having black and fawn, it was like one of the dumbest things in hindsight. I don't know if I can show you. Sorry, I just saw that. Yeah, the box doesn't come up because I'm streaming. You right click the chart, you go to settings, and then it's under visual trading, and then that'll give you a drop down, and then there's positions, orders, trades, stop loss, take profit, and all of them you can turn on and off. So it should just be trades. It's nice that like no matter what I have up on my screen, like this is what shows. But like if I try to show, like if I wanted to show you the settings thing, I can't do that. I would have to go to where it's a screen share, not program share, which is fine. Wait, didn't it? Real quick before she's done, I'm gonna log my trades from earlier on my options plays. I didn't do that yet. Get it, Justin. Tucker, no bark. Choppy chop 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 chop. I think that's what we're on to. Oh, isn't there supposed to be news coming up? Nope. It's just tomorrow morning. I got a question for you guys. Maybe you guys can help me out. So I bought this water bottle, right? And it's got one of these long, droopy straws, right? I want to find a way to shape it. Like I want to find something to wrap around it so that I can like make it stay up like this. You think of anything that could do something like that? Like some kind of like tubing or something like that? Because for right now, my solution has been to just wrap it around, and it's been working actually. I just leave it like this. But I was hoping, like there's a bunch of like tubing and stuff that you could buy. I don't know. I just didn't know if maybe one of you guys would be smarter than me, and I couldn't find anything specifically for it. Damn, that short from yesterday actually took off a little bit. It's over 1,000 views. It's got over 1,000 views. Oh. It was kind of funny. Damn, 1,233. It was only at 900 this morning. Thing's popping. I will say, it has a 65% like to dislike ratio, though. I don't know how I feel about that. Or like people watching it and they're mad that I'm so upset about it. Going short here? All right, I like it. Let's see how the call out works. I will say, if Kev is right here, or Cav, or just say Cav, I'll say Sev. If Sev's right here, he'll be 4 for 4 today. You should post your charts in the Discord. I have a channel just for that. I will say, I mean, if we break below here, the odds are you're going to get a decent push down. How far is 15 ticks, just out of curiosity? Found support so far. In theory, though, if you're looking for the bigger move, if you could get short somewhere in this current area, got a pretty obvious stop out. Like if you think we're going to move lower back towards the lows, get short somewhere around here, got an obvious stop here. Oh, here they come. I remember they did this last time. Thankfully, I put the 5-minute sub thing on because they were getting out of control. Sasha sounds like a real account, though. Welcome, Sasha. Yeah, all the my 4 shorts that I've put out have all done fairly well. 511, 747, 965, and then this one did 1233. They're progressively getting more and more views. $30 minutes to an hour? Dang, yeah. So you're trying to get like the actual direction. Yeah, ES definitely trades a little bit different. That wasn't even 5 minutes. How'd you talk so fast, Sasha? Explain to me. You know, hold on, Market Froggo. Let Sasha stay. That actually looks like real talk, real text. That's not even like a script. So, how am I a Furu scammer? Let's hear it. I want a legit answer, Sasha. What do I do to be a Furu scammer? While I go get another drink. Because I'm down 59 bucks on the day. Well, the ES is more of a, if you like to follow the trend. People say it's a lot easier to read the charts. Or if you're more of a scalper, the NQ is a little bit easier in my opinion because you get the quick movements. Yeah. See how David's doing today. I haven't checked in on him today. From the charts he's been posting, he's been doing pretty good. Oh, so apparently it was a script. All right, Froggo, you can do your thing. I know you enjoy it. If not, I'll do it. All right. Literally type the exact same thing. Ooh, David having a spicy day. David's doing good. He's up 700 on the day so far. I'm pretty sure they used to come in here talking about Apex, like Apex is a scam, stuff like that. So I'm assuming it's just these other firms trying to get people to think Apex is bad so that they'll go to the other ones. I mean, if it's not one of the other firms doing it, then what's the point? Like you said, it doesn't make any sense. I've actually tried having a conversation with them before, and the guy that I think is running the bots, he actually talked once. It was funny because he got pissed that I changed it to the 5-minute subscription thing. So he had to get all of his bots to subscribe just to say something. It was kind of funny. He got pretty pissy about it. I remember he was just like something. I don't even remember what he said, but he ended it with like that I'm such a loser for doing it or something like that. It was pretty funny because all this other stuff was obviously scripted, but what he said wasn't. Yeah, no, I agree. Oh, there you go, Sev. I'm assuming you're still in this. I don't think that was. I don't think I would have got filled. At least not on that push. It goes back up a little bit more. I'll check. Let's see. Ooh, yeah. It would literally would have went right to my order and jumped up. Who would have thought? I'm not even in it, and it still does it. It knew my order was there. As long as you guys keep using my code when you sign up, it's definitely appreciated, and it definitely helps me. Definitely can't complain on that side of things. Oh, would have got filled there. Every little bit helps. Especially because this is what I'm trying to do full time. It would be nice if I could actually make some real money from it. Looks like a few people signed up today, actually. Ooh, nice move here. The heck was that? Come on, man. Just that initial Just can't ever get it on that initial push. As of late. I feel like I used to get that all the time. I want to take it off so bad because I feel like we're not going to get it. Ugh. What is going on? It's just sitting there. Are you kidding me, man? I can't make this stuff up. 94, 494. It literally went to our take profit again to the tick. I can't make this stuff up. I should have just hit the button. I can't make this stuff up. I really can't. To the tick. Like, why couldn't it go one tick further and just fill us? You gotta be shitting me. I mean, what am I supposed to do when it does this? It's every time. Every fucking time. And it's not like I'm like lying. Like, you guys see it. It happens all the time. Like, to the tick. It's ridiculous. Like, it couldn't just go to 50? Like, one tick higher? Well, yeah, it obviously feels like it wants to go lower. I mean, I got my trades in. I even lowered it so it's one tick under the high there. If it gives me a chance, I'm probably just going to get out, break even. Because this obviously isn't the trade I want anymore. Just a joke, man. It'll probably mess with me. It probably won't even give me that opportunity. It'll just sit there, bounce right off of it. Literally to the tick. To the tick. Literally, I was on the ask. Guys, I can't make this up. I literally can't make this up. I can't make this stuff up. I can't make this stuff up. It's gonna try to get out on the ask. If it comes back up. I can't make this stuff up. It's ridiculous. It missed us by a tick again. Literally. Oh, I guess I got to put my stop in still. Can't get rid of it. Oh boy. Definitely feels like it wants to go lower now. Just give me a chance. Get out here. Come on, go up through it. At least try. It's just absolutely ridiculous, man. And now it'll probably go up to 500 again. Now that I'm out, it won't chop here. It'll literally burst through here and shoot up to 500. You can't make the shit up. You can't make the shit up. You can't. You can't make the shit up. You just can't. You just can't make the shit up, man. A tick twice. Literally. I was on the ass, didn't get filled. One tick, missed, drops all the way back down. Comes back up, I finally get out, it fucking shoots up. Get out of here, man. Just, I can't take this shit sometimes. You can't make it up, man. You can't make this stuff up. Literally, just, ugh. God forbid I would have held my position. That bitch would have found a way to go lower. What a joke. What a joke. Deep breaths, deep breaths. All right, my wife said she's ready to go on that car ride with the pup, so I'm just going to do that before I do something stupid. Down 44 after commissions, 20 before. That's where we stand. Hopefully it stays that way. I'd rather just nothing. I don't know. Even if I do take a trade later, it'll probably, I don't know. I might do it on the micros instead. I'm literally, it's a fight. Every day this week has been a fight. And I don't know if I want to even trade lower or trade more, but I'll see y'all tomorrow morning. I'll be here. Until then, peace out. Stay safe. All that good stuff. Yeah.